Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Crypto markets are witnessing a violent shift in leverage dynamics on the Hyperliquid platform. Maki Big Brother, a prominent whale trader, triggered 7 massive liquidations in a single session. These moves are not random. They are mapping real-time support and resistance levels for Ethereum. The liquidations expose the fragility of long positions at specific price zones. Traders are now watching these levels closely for potential reversals. The market structure is shifting rapidly as leverage unwinds. Meanwhile, the global energy landscape is fracturing over environmental policy. The European Union's new methane regulations have sparked a diplomatic crisis. The United States and Qatar are threatening to halt liquefied natural gas exports to the bloc. This is a direct challenge to Brussels' green agenda. European buyers face a severe supply crunch if exports stop. Prices for natural gas in Europe could spike significantly. The trade war highlights the tension between climate goals and energy security. On the macro front, central bank policy remains a key driver. The Federal Reserve's latest stress tests reveal deep systemic vulnerabilities. U.S. banks could lose $700 billion in a severe economic downturn. This figure highlights the fragility of the current financial system. It serves as a warning to investors about potential credit risks. The macro headwinds are intensifying for the banking sector. In related news, Turkey's economic outlook is stabilizing despite geopolitical strain. Central Bank Governor Fatih Karhan cites robust demand for the lira. Strong foreign reserves are helping to anchor inflation expectations. Despite external pressures, the central bank maintains a cautious stance. The lira's strength suggests underlying confidence in monetary policy. Looking ahead to corporate strategy, Qualcomm is making a bold pivot. The chipmaker has doubled its non-handset revenue target to $40 billion by 2029. This growth is driven by a strategic partnership with Meta. Data center AI chips are becoming a primary engine for expansion. Qualcomm is moving beyond mobile devices into the high-growth AI infrastructure market. This signals a major shift in their long-term revenue mix. While there are no major economic calendar releases in the next 36 hours that will move markets immediately, investors should watch for subtle shifts in sentiment. The lack of data releases means the market is pricing in the geopolitical and corporate news we discussed. The $700 billion bank loss figure and the LNG trade tensions are the dominant narratives. They will dictate volatility in the coming sessions. The crypto liquidations show leverage is being cleaned out. The LNG dispute shows energy markets are politicized. The Fed stress tests show financial fragility. Qualcomm shows tech is pivoting to AI. These 4 themes are interconnected. They reflect a world where policy, energy, finance, and technology are colliding. Investors must navigate this complex landscape with caution. The $40 billion target for Qualcomm is ambitious. The $700 billion potential loss for banks is alarming. The LNG threat is immediate. The crypto levels are critical. All eyes are on these numbers. That's your market briefing. Follow Rumour with AI for daily market intelligence.